So, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today's Saturday, the 20th, I believe, the 22nd. It would have to be the 22nd because yesterday's the 21st. Anyway, hope that y'all are doing well. Really high volatility markets to work with. We've had some exceptional breakouts and breakdowns and good opportunities to be on both sides of the market, long and short, depending on which way the market heads. Here's just a sample screen cap of just a few of my trades yesterday where I was trading SOXL going up. Starting off, how many of you guys trade SOXL and some of the other leveraged ETFs like SQs, TQ, SQQQ, TQQQ, UVXY, SOXL, and SOXS? How many of you trade leveraged inverse or leveraged ETFs? Just curious. Oh, big turnout today. And by the way, I'm not just bearish. You can see, obviously, I bought the F out of SOXL, nailed that punk on the way up, right? I'll show you the chart in just a second, but also I got a new green screen background. Is this better? I think it's better because it's not when my face is out, nice frame, some space here. I filmed my, let's see. I used my cell phone to film the background and then I put that in the green screen, so. Is the camera, so anyway, good to know. Okay, trade SQs. Wow, okay, big turnout. Hey, Cam, Aaron, Philip, Pete, Suzanne, Terry. Okay, thanks. Hey, Kent. Yeah, that's why, let's see, Trader Kent was saying I got stopped out of SOXL at break even and then it ran away from me. Yeah, it keeps, that's why I like to hammer away at these charts because we have so many setups to work with. Let me close this. We'll start off by looking at our S&P. So we had a bullish engulfing in the market back near the week before last, and another big update today or yesterday, but we're still in a directional downtrend. So I still think the market's going to go down. We may get a day or two of bear market rally, but I still think the market's going to keep headed big picture downwards. We may get some choppy market. So that's what we're navigating right now is chop. The number one thing I've learned in doing quite a few hundred trades last week was you really need to adapt your style based on the strength of the market. And high volatility days like yesterday traded aggressively. Low volatility days like Wednesday was relatively flat. Doji day kind of sideways chop. So you really have to adjust your trading style to fit the market. So being more flexible in how you trade is an important, just a kind of generic thing. Support's obviously 3650, resistance obviously 3750. I would not be long biased this market. The more important bit of intel is I would not be long this market unless we get 3 days or more of green in a row over that 3,800. Okay, we have to go up another, 50 handles on that. When at 3,800 for 3 green days in a row or more. If failing that, still be suspicious about any up move and fade it and consider downward plays like buying puts or inverses. 3650 is obvious support. If we take a look at our VIX, you see it's kind of been up and down last week, right? Or the last couple of weeks. Last week it's been pulling back here. How many days in a row does the VIX go up or down before reversing? If you want to make, you have my word on this. If you want to be successful as a trader, you have to be extremely good at and understanding how to trade the VIX. And that's what I teach as part of what we look at in terms of market bias, in addition to all the alerts in my live room. But just looking at the data, how many days in a row? Remember how I nailed the exact bottom call in UVXY? It had been going down for like 3 weeks, and I said, that's too long, it's going to pivot. And sure enough, the next day was a beginning of a relief rally to the upside. How many days does the VIX go green or red in a row before a reversal? What does the data tell you? I want to teach you how to become database traders. I'm a former corporate statistician for the Ford Motor Company. I'm a UCLA graduate. I got a couple of degrees. I know how this stuff works and millions of dollars worth of trade experience. VIX has been red 5 days in a row. How many more red days do you think we'll get? No more than 1 or 2. The VIX is going to bounce back up and the market's destined to drop. How many people on Talking Head Television Land tell you that? They don't. They say, oh, I look at an indicator or I look at an oscillator. It's bullshit. like my colleague Steve Nissen says, you want to be a market detective, like a CSI detective. You're at a crime scene. Where's the DNA sample? Where's the evidence that builds a case, builds a story, builds an evidence chain towards a perp? Well, here we've got a 5 red days in the VIX. That's not going to stay. The VIX is going to bounce within no later than Wednesday, but probably Monday, Tuesday at the latest. That's really important that you understand that kind of thinking. You have to be intelligent if you're going to make it as a trader. And you have to think beyond simple support and resistance or stupid squiggly line indicators on charts. We don't care about that. We care about directional vol and scaling, directional volatility, scaling, and how to make money with the market. So anyway, that's the one thing that jumps out to me just right now. Is everybody, I don't know how many of you may agree or not, really big, wow, big turnout, hundreds of people. Well, thank you all for being here. Namaste, I appreciate it. Intelligently, what's the data tell you? That's how you become a good trader. Not by me or anyone else, teaching you or hand holding you. It's teaching you how to think ahead. We're pattern day traders and swing traders. It's all about patterns. Patterns repeat. So the pattern of 5 reds isn't going to hold. We had 3 reds, we had 4 reds, 3 reds, 3 reds, 3 reds, 2 reds. Nowhere in the last 3 months have we seen more than 5 reds in a row. Back here we have 3, 6, 7. So we had one stretch of like 7, but everything else is less than 5. 3, 5. So what that tells me is the VIX is destined to bounce no later than Wednesday. And I'd bet $1,000 on that easily. I'd bet 10,000 on that. Anyway, VIX, I don't know if anyone's going to take me on that, but VIX will bounce by Wednesday. And with it will our inverse ETFs. So for example, I really like SQs. Let me open this up so it's easy to see. SQs went up and it went back down. Now, if we take a look at a multi-day chart, you can see on this one. Now, I think it was oversold, so I bought some yesterday after the close. It was on sale. If you look at the 10-day, we're at support. If you look at instruments like the UVXY, we've been going down, we're starting to bounce. If you look at things like our SQs, it's at support. Now, if you look at the S&P itself, however, this last couple of weeks, it's been an uptrend, and we're currently right under 376. Now, what I want you to look at when you're trying to find out first of all, let's take a look at some swing trading charts. I'll pull this up. Let me know 1 or 2 tickers you guys would like me to pull up, and I will pull those tickers up. We'll take a look at the swing charts. Interesting to see some of the gaps lately, right? Like the Twitter gap, right? The whole thing faded. The gap down and pivoted up. Snapchat, not so lucky, right? Oh, wow. Okay, thanks, guys. I'm gonna have to, let me go through these and then I have to type they're just scrolling by. Give me your favorite chart and I'll pull it up and I'll give you my honest assessment of whether or not I trade it, and if so, how. Some big names here, Transocean, Robinhood, Starbucks, Coke. Keep them coming. And in the meantime, let's take a look at these charts. What happened with Twitter? Well, it gapped down and it bounced, right? Pretty interesting pivot. Our TBT starting to continue on up. This is the single most consistent chart I've found, right? The TBT going all the way from 24 to 38. Now, quick question. Is this a good place to buy this? For those of you who know me, you know that I never buy 9s, but I'm going to buy this right over 40 because I expect to run into resistance and chop. If you're long here, great. Trail to stop, no more than a 2-day low at say 36. And scale in, or I'm not going to buy it here because it's right under 40. But if it breaks and holds over the 40 for a day or so, I will get long this thing. Some of you asked about PayPal. That's a bad chart. Disney. I'm going to blaze through these. These are some charts that you folks had asked about earlier. Oh, wow. This will be all about you. So which charts would you like me to pull up? I'm sorry, I was typing. I got all these people who typed in here. Really big turnout today. Let's see. Okay, we'll look at those in just a second. Well, that's a great chart. I love that. That's one of the best charts I've seen. I've never heard of this one, WFRD. Everybody make a note, WFRD. I'll hit that over 37. That's a really good uptrend. Anyway, thanks. We'll look at that and others. Moving forward into next week, two things to keep in mind. One is this support and resistance levels on the S&P. Let me give you what I'm looking at on the VIX here. Obviously, we've got a hard support line down here right near the 28. We may fill that down and then pivot back up. The key VIX levels, and write this down, and you'll see all these Wall Street newsletters who are listening to me will copy this, but that's okay. You heard it here first. R1's going to be 32 on the VIX, and I'm going to use 28 as S1, which means we want to short the market if we get north of 32. We want to go long the market or continue to scale in to existing swing trades only if our VIX drops under the 28, because that's S1. So using 28 by 32, it's a four handle, 4-point range in VIX. So hey, we'll buy the market if it gets under the 28. We'll short the market or go long inverses if we get over the 32. And we should stay clear in this chop zone. Last week's last few days, the 30 to 31 was kind of brutal trading for some of the days, really choppy, especially early in the week. Yesterday was a piece of cake, but some of the days were really choppy. So hold off on making aggressive trade decisions until the bulls or the bear, whoever takes charge. So we're in a descending VIX, so that's net bullish, but I expect that we will see a pivot before then. So that's the VIX level. Another quick thing before we look at everyone's charts is the intraday charts. Novavax was a runner yesterday. Was anyone else trading Invax? It was a really good day trade, right? It ran all the way from 17 to 19 and a half. So a $2.50 run did a slightly more than a mean reversion, but beyond mean reversion, but it ran up, pulled down, found support, and pivoted off the whole number area. Now, one thing that I urge all of you to do is pay attention to our whole numbers, because whole number patterns are very consistent. 17 whole number support. 18 whole number support area. 19 gets toppy and fakes out up there. Each one of those support levels, the whole numbers gives you a trading decision and a trading opportunity. What do you do once something gets right above a whole number? Well, you buy it. What happens when it gets right under the nearest whole number? Well, tighten the trail stop or go to cash. What happens if something comes from above, like this did off this 19 and pulls down to the nearest whole number 18? That told me to go long right over the 18, like 1820, I think it was. Yeah, 1820. I think that was my call. No, 1808, that was my call. You can see right here. By the way, one key feature that I offer in my live room that nobody else in the world does is I am intelligent and good enough and brave enough, because I am good enough to give specific entries ahead of time, long ahead of time. So when this was way down at 17 and change, I said we go long if it gets over 1808, right? So I post an update throughout the day, entry prices, and also where to trail a stop, when to go to cash, and when to scale in. So you're covered. And that's something I offer exclusively in my live room experience. Now, one thing I wanted to mention is that I'm repeating a special that I did in October because it's so popular. Something like 215. A lot of people took advantage of the October sale. So I'm going to do a repeat in November. You can join my live room for a whole month for just $97. There's no subscription attached to that. It's a one-time only fee, and it's money back guarantee. So 3 ways from Sunday. So no BS guarantee, no hoops to jump through. It's only the $97. The reason I'm offering it at that low price is to get you hooked on working with me. Frankly, once you see my room's accuracy of the alerts, the intelligence of the training, the step-by-step walkthroughs from start to finish, and everything else, I'm sure you'll be confident to join me like so many other thousands have. So that's at trademastery.com gold ticket. is the ticker. And so I'm basically repeating the offer that I did for the month of October. So for $97, you get with me for the whole month of November, Monday through Friday. We meet 8:30 till 11 and 3:30 to 4, and any FOMC or other high volatility timeframes, 2 in the afternoon on a Thursday or whatnot. So many dozens of hours of training, and it's only $97, and money back satisfaction completely guaranteed. So far, nobody's asked for the money back. So on the October offer, so that's good. I'm glad that I can be of service. Anyway, it's at trademastery.com/gold ticket. And now back to our regularly scheduled presentation. Let's clear the drawings. Anyway, so my point was, we use those whole numbers very carefully to develop a trading plan with where to enter and where's our entry, our target, our initial stop, and our trailing stop once it works out. Trader mentioned AMD. One thing that makes running my room so pleasant for me is I've got a lot of really smart traders, which is good. A guy like me, I tend to attract the smart people and repel the not so smart people, and I'm very happy with that. So I've got a lot of brilliant traders. You can repeat. If you did October, you can do November. Sure. Why not? Yeah, glad to have you here, man. It's and end of day. Remember, I nailed the end of day call in IMAX, right? I'm sorry, that's Snap. No, that one I didn't get. I didn't get the end of day in Snap. We're going after an end of day in IMAX. Okay. That one didn't go. Okay. Whenever you have something that does a big drop, one pattern to look for, by the way, is end of day short squeezes. Now, we didn't get it on Friday, but keep it on the radar for Monday. IMUX. It was the most active traded stock in the world, or in the American exchanges on Friday yesterday. So IMUX, it went from 9 down to 2. Maybe it goes to 0, who knows? But if it bounces, keep an eye on that one. Snapchat does, however, illustrate a good concept, which is end of day pivots. This is kind of a close-up. You can see the latter part of the session there into the 4 o'clock, or into the later part of the day. We like to use a variety of candlestick chart patterns and make them really easy to see. So minute by minute, you can see what that means to you as a trader. Is you can understand the patterns as they are emerging live in real time, and I walk you through them step by step. And I make it easy to understand. So that's the goal. GDXU was up. Gold was up yesterday, right? For the gold bugs in the house. Boom. You can see my long call was 262. I said to go long at 262, ran all the way to 288. So for that chart, that's good. Soxal, look, I called it at 7. There, see, does everyone see right here? Over here, 785. That's the long call that I made for my members before it was there. It was down like 750 pre-market. I said in market we go long if it hits the 785, and so forth and so on. So, in UVXY I called it at 1177. It did a nice bump early in the morning. I like gold, but it's been up quite a bit. Did a nice gap up yesterday, our inverse natural gas. I've been long this for the last 2 weeks, I think it is, in my swing trading account, in my retirement account. Anyway, natural gas inverse KOLD. Keep that one on the radar next week, because it did a gap up and it held the gap, which is always a sign of strength. Who knows where it's going to gap on Monday, but KOLD's in play. And I also like charts like the SOXS if it bounces. And the SOX, it's opposite SOXL if it continues up. I was trading this thing frequently yesterday, right? It was easy. I don't know how many of you are trading SOXL with me, but it's a piece of cake, right? So many good uptrends. Let's see, Soxal, I bought the 785. Could I explain why? Yeah, the reason for 785 long call, when it was down here, I said, we go long at 785. Now, I don't buy 9s, but I do buy the 8s and the 8.5s. I know it's kind of pushing, it's getting close to the whole number, but the reason for my 785 long call, which was brilliantly set right there, is that it was right above the previous tweezer top or whatever, right near the 7.8. So I called along a nickel above it, and it took off like a champ, right? So I would not, though, ever call a 790 or a 795. I don't ever post long alerts at 0.9s or above. but occasionally we'll get as high as the 0.85. My preference, though, is to go long right above a whole number, like say 810 over here, right? Or 820.30, and then sell at the end of the day. What else? Okay, let me get back to you guys. Oh yeah, Bitcoin was up yesterday, right? So Marathon and others. Let's get back to our swing trading charts, and we'll take a look. Oh yeah, another feature that's brand new that I should mention for you good folks is in the live room. I do swing trades at the end of the day immediately after 4 o'clock. So we stay around for maybe 10 or 15 minutes, and we go through the best charts that are making 2-day high breakouts or gap continuation runs. That's what I swing trade. Things that are going up and they're strong. They're likely to make me money. So that's another added benefit to the live room is I stay around and also answer questions. But we go through very briefly, just 2 or 3, maybe 4 charts that are worth a swing trade. And I give my members exact tips on how to do that right after the bell at 4 o'clock. And you're certainly welcome to join me for those as well by joining that gold ticket offer. Anyway, WFRD is great. That'll play. The first question to answer is this thing worth trading in the first place? That's a brilliant yes chart. TBT, I've been calling it along. Somebody mentioned it way back in the 20s, and I've been calling it along here ever since. So TBT is fantastic. WFRD is outstanding as well. I doubt that we'll see any 2 charts that are that good, but we'll see. Transocean. It's going up. That chart really sucks. It's right near resistance. It doesn't have much range. Well, I should say the range isn't terrible, but it doesn't have an emergent new high. In fact, it's getting near an exhaustion area, so this would be a terrible chart. So Rig, you're fired. How about Robinhood? Wow, that sucks. That's the worst chart I've seen all day long. Congratulations to whoever gave me Hood. You get the what do they call it? The Razzie Award for charts. This is not only a narrow range chart, but it's choppy as fudge. And this is a terrible chart that nobody in their right mind should ever touch with a 10-foot pole. You're fired. That's a horrible chart. Starbucks. That's a horrible chart. That joins the Hood in the terrible charts award. Boom. Coca-Cola. Choppy as fucking, it's choppy as heck. Now that one's a little better. I like Kobe because it's clean. The charts to avoid are messy, choppy charts like the 2 that somebody just gave me. The charts to avoid are the ones that the smart traders gave me, the TBT and WFRD. Those are tradable. How about TVN? Oh, that bites. It's up and down. It doesn't have consistency. Geno's, I'd give it a C-. Better charts out there. Ford. I like the company, and I think it'll do well with its EV and F-150 once they resolve their supply chain issues. But wait, we're not talking head channel. This is technical trading channel, baby. This thing isn't a bear cup drop. This is a stay away, stinky chart, short the 11. Again, these are not trading recommendations. It's what I'm thinking about for my own use only. I just happen to say it out loud. I'd short that at 11. I'd buy it over 13.2. I'd short the 11. But big picture, until many things get better, I don't think car companies are a smart place to park one's money. OxyPete is no good anymore. It used to be good. So of all the charts and all the land, the 2 best to understand are the ones that go up. And I think that's it. All right. Let me know if any other tickers. Oh, a bunch have been coming in. Okay. Valero. Oh, this phone. It's okay, but not good. Not better than the others, so I wouldn't trade it. Netflix. Keep the tickers coming. I'll answer. Netflix, again, this is a good example of don't buy a 9. So for this one, I'd go long over the 300, say a 302 or 301, something like that. Keep it on the radar, see what it does as it gets to and chops around near the 300. We don't want to buy a 9 right under a century mark, just like I don't buy a 0.9 under a whole number. I wouldn't buy a 290 up here. At day trade it though, sure. Netflix will play for day trade, but I wouldn't swing trade it until it breaks the 300. Let's see, KHC. Well, that chart sucks. Okay, let's see, Amazon. Oh, that really sucks. Let's see, SLB. You guys, let me break it down for you. You're supposed like that. That one, that rocks. That's okay. Finally, you Schlumberger, right? That's a good chart. You guys are supposed to trade charts that go up because you want to make effing money, right? You're not going to make money if you trade stuff that chops around like crap, right? You're not going to make money if you trade charts with narrow trading ranges without profit potential. You're not going to make money trading crap that's going down and grinding down and has no sign of life to it. You're not going to make money trading cheap ass charts that are frantically all over the place, driven by speculator scalpers. You're not going to make money trading junk. You want to trade charts that have some sparkle, some shine, and some consistency. A successful trader, we always trade consistent charts and the outlier charts. If there's a huge gap up or a huge gap down, that may be a fade or a continuation. But bread and butter charts are going to be like that TBT chart, right? So I like SLB. That'd probably be better for day trading than swing trading, by the way, because the volatility is kind of high. But I'm curious what the intraday. Yeah, the volume looks great. Volume's great. Let's take a look. Yeah, that's good. I'll trade that on Monday. Thanks, man. Whoever mentioned that. SLB. Oh wow, all these. I have to scroll back through the tickers. I have so many of you here. I hit that. That's a good chart for a day trader and a swing trade. More for a day trade than a swing trade because the downside risk of a gap and an adverse gap is a little extreme given a range of 46 to 50. It's a 4-point range, and it may gap $2 or $3, which is a little rich, and it's not bad, but yeah, this would be great for a day trade. This would be great for a day trade and okay for a swing trade. But yeah, it's absolutely tradable, so that's a good chart. Thank you. Oh wow, I got all these other ones. Okay, let's see. I'm trying to stay up with you guys. A really big turnout today. Wow, it's a record breaker. I haven't seen this many people since I think it was February. So hundreds of people. So that's cool. Thank you for being here. And see, no big extended sales pitch BS. No, time limit instead of $10,000, it's only $2,000. Anyway, Vista, that one's good. That'll play. That one gets stamp of approval. That's a good chart. VIST. So far out of about 15 charts, you guys came up with 3. No wonder so many people F up and lose their money trading. You got to trade good charts. Let's see what else. So Alex, good call on the SLB. Let's see what else we have. Oxy, Halliburton, and XLE. Let's see. Well, Oxy P was good until it started chopping around and pulling back with the weakness and crude. So I'm not a big fan of Oxy way they F up here. It's kind of rich and choppy. If you're an investor, absolutely. If you're a Warren Buffett type investor, absolutely be a good core holding along with reputable companies like Apple and Amazon and some of the energy and healthcare and consumer staples and defensive stocks, value versus growth, et cetera, et cetera. But this is not Talking Head television channel. I just want to trade and make money. So I'm not planning on holding anything longer than a few days, a week or so at the most, not much less months. But yeah, if it ever clears up over the 80, maybe Oxy. All right, what else? Halliburton. So for an investor, it should be a core holding. Yeah, I definitely support that. But for an active trader, it's not good right here. Let's get back to our 6 month. Or let's say, in fact, 3 month. Okay, that's good. That'll play. Halliburton's in play, so that's an oil play. So that's an oil that's looking good. Yeah, Chevron's okay too. XLE or energy ETF. It's been good. Yeah, maybe good if it does break new highs over the 88. So yeah, XLE, it'll play. The story of green to red. It's not great because it's kind of up and down, but it's relatively good strength the last few weeks. I like the strength of that chart, but I prefer the consistency in charts like that. You want unbroken charts. The closer, because this kind of chart, that's easy, right? Let's see, REGN. We're going to wrap up here in just a minute, and a few more tickers people ask about. Not for active trading. No, let's see. Yeah, that's good. That'll play. Yeah, that one's. In fact, I will day trade that one too, so I'll put that over here. Yeah, the volume's good. Thanks. So there's so many good charts out there, and we can't possibly all get all of them. So I appreciate you guys volunteering some charts to look at. I'm curious what the intraday looks like. Yeah, that's great. Yeah, perfect chart. Thanks. I'll probably make money with this, so thank you. I will trade this on Monday or Tuesday. Now, again, remember the day after a relatively big move in a given stock, the next day, the following day, like a gap, day after a gap, likely to be retracing or a relatively quiet, low volatility day. So this may not be good Monday, but it may pick up the heat again Tuesday or Wednesday. So keep an eye on NOV come Tuesday for sure. Just a quick caveat there. But yeah, that's a good chart. Great, clean, straight, good chart. That'll play. That's the kind of chart we're looking for. So thanks, Matt. That makes sense. Finally. So that's our short list of swings that look good right now. TBT, WFRD, SLB, VST, HAL, etc. And what else? Again, keep an eye on Novavax. And UVXY, I bought 1,000 of this after the market, as I often do. Sometimes it works out, sometimes not. But I don't want to be, I would say, out of inverse instruments. So I'm long UVXY, I'm long SQs, I'm long KOLD, I'm long a variety of different instruments that go up when the market goes down. And the reason is if you look at the daily chart, we're at the lower end of a channel. But it is going up, right? It is a hockey stick up. If you look at longer term chart, you can see. Trying to get the 2-year here. We're going to wrap up in just a sec. Okay, put in 1 year. Anyway, the main thing about this is we've recovered the previous low area, right? Previous major support in UVXY is right near 11, and it's been in a channel up for the last month and a half, and so that's a rare thing for it. It's likely to spike up come next week, so keep an eye on this one, especially if it breaks the 14 as well. If you look at the S&P, see, people get all bullish about it, but you put it in perspective, that's still a horrible chart. That's a terrible downtrending chart that's near the bottom of its range. So that's a terrible chart to buy into. People usually, myself included, back in the old days, usually end up on the wrong side of things if you try and guess at bottoms. It's usually better to buy strength when it's there. So this stock market is still very weak, still sellers clearly in charge. The first resistance level is obviously 3,800 or 380 on the spiders, 3,800, just what, 7 handles up on this. But for now, we want to stay short bias as the market's going down. At least I do. And we will see where they go from here. But I liked Soxel yesterday. It was fun. That's my favorite thing to day trade yesterday. Because of the nice run. One last thing. One tip is do look at multiple time frames, and so that you've got so that you can see, and relatively easy to see charts with candles that are relatively simple to look at. And one thing you may want to look at is a last thought. Not only the 1 minute, kind of like a tick chart, but look at the 5, the 10, and or the 15-minute candlestick chart. This is a 5 minute. That gives you, kind of removes a lot of the noise and boils things down into actionable, bite-sized price action windows. And so as I'm day trading, I'm always looking at the tape, the time and sales window, and the, like you can see scrolling in the video back there, the recording I made yesterday. Anyway, keep an eye on the tape and the 1 minute for the minute by minute. But for stronger intraday moves, you really want to use a 5 or a 15-minute candle pattern, and that will help hopefully keep you out of trouble and in on good moves as they run, because they are out there. All right, well, I'm going to wrap for now. It's been a great morning. I wanted to thank all of you for your enthusiasm and your support. Do feel free to try out my live room for the month of November. And as one trader just requested, yes, you can do this again if you want. If you, so many people done this past month, the October, so I'm repeating it for November. It's 1 month, $97, in and done. There's no recurring fee attached to that, so no subscription, and I even guarantee it, a money back guarantee, a complete money back guarantee, and no questions asked. So I want you to learn. I want you to hopefully pick up ideas from not just me, but the other traders in the room, and be able to get good tips and strategies and the rest of it that you need to make both day and swing trading for stocks and ETFs. Usually $10 to $30, $10 to $40 share range. That's what 90% of what I focus on is roughly $10 or $15 on the low end, up to around 40 on the high end. Now I do occasionally cover $2 and $3 stocks and things like Tesla or Apple or whatnot, but the majority of what we cover is maybe $20 to $30. The big majority would be 20-ish, 30-ish a share stock intraday and swing trade charts. Although we do cover the under $10 and the higher ones on occasion. So that'll do it. Let me know if any questions. Let's see. TBT still straight. Oh yeah, the link is, oh yeah, thanks. It's trademastery.com/gold ticket. It's up here. No one is saying internet marketer, so I'm sorry I didn't put it in the chat box, but let's see a question from Phil. If market goes against my UX value, what do I do? Would I unload some shares? Well, yeah, I always lighten up at 2-day lows and I scale in at 2-day highs. So if it gets under, say, 11, I'll likely be out of cash and I'll get back in on any recovery. So then if it goes up, I'll be doubling down, because I'm only in a total, I think it's 1,450 shares. I got 450 in one account and I just bought 1,000 yesterday, as I often do into the weekend, because often you get bad weekend news and then that leads to a red Monday. And if I'm already short the market, by being in the inverses, then that puts me ahead of the game and I can bank profit Monday pre-market if the gaps start to fade. So should be interesting. Thanks. All right. Well, I will see you guys next time. And again, the link is trademastery.com/gold ticket. It'd be an honor. It'd be great to work with you guys. I'm friendly. I'm easy to go get along with, and I'm happy to help answer any questions I can. So anyway, let's wrap up for now, and I will see you guys, if not Monday, at least next Saturday, hopefully. All right, take care.